Happy Friday, traders. In fact, happy non-farm payrolls. Unemployment Friday. It is the 5th of November, 2021. It's 8 a.m. Chicago time. This is episode number 2110. 2110. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Just a quick mic check, please, just to make sure I'm coming across loud and clear, not too loud, not too soft. We're going to jump right into the Convergent Trading pre-market summary sheet here. And as we see in front of us, the market has taken a pop higher, although trading non-farm payroll is kind of bizarre. It didn't go anywhere. And then all of a sudden, some trade desk somewhere woke up and decided to buy it. So that's what we have this morning. Risk on sentiment across the board. It looks like we are positive across the indices, with the Russell leading again, the Russell popping pretty strong on the non-farm payrolls there. Crude coming off a little bit from where it was. Crude trading below $80, below $80 at this point. Most likely making its way back to that key area, this high volume node area at 75. That's where I would expect it to take a rest or retest. Balance down there in crude, although it's showing as that it's positive so far today. It has actually come off a little bit from where it was. So that's crude. You can see the rest of them here. I'm not going to go through it piece by piece. I'd like to cut out quickly to prepare for the open. As far as earnings, Honda, Magna, Dominion Energies, Cinemark, DraftKings are the headliners pre-market. Let's look at how they did. Looks like some misses, some positives. Yeah, it's all over the place. And then after the close today, there's nothing major. Nothing on the calendar either. The market, of course, is focused on the results. The non-farm payroll beat came in at 531, was it? 531,000 jobs created versus 450 expected, so beats there. But it also beat the unemployment rate, came in at 4.6 versus 4.7, looking good. The previous is 312. So that's where that stands. The S&P is in a multi-distribution profile. Currently, it has traded several areas. It has created a high volume node in line with yesterday's settlement. So it spent quite a bit of time there. And then the European market opened, and the Europeans lifted the market, taking it up to what is now the point of control at 46.85. We consolidated at 46.85 a while, and that's where we broke higher from. The SOC for the unemployment report was traded through. And the only other piece that you should know is the range is decent. The overnight inventory is about 50% long. And the point of control is at 46.85, and we stopped short of 4,700 at 46.97. That's where we stand, folks. So non-farm payroll, that's where it's at. That's where the party's at today. Let's take a look very quickly at what was expected. Yesterday. I didn't put any lines on here because we're at we're opening in new all-time highs. I outlined at 78, 62, 55, and I cut it off here. Let's fix that. 32 and 26, 27 were the key. The primary scenario really didn't matter. I talked about an ideal scenario just the sake of argument, an ideal scenario is a test higher that breaks through the 55, gets to 50, breaks through the 50, pulls back, giving us a short into 32.26. Of course, that didn't happen. That was just wishful thinking. Here's what actually took place yesterday in the RTH session. We opened up at 58, tested down to 54. We initially tested up to 59 and a quarter, so we opened just outside of the range. The open looked like an open auction until this first push higher came in. This thing just kind of ran on its own. Remember, we had a 78 level here. We got to basically 75. We pushed to 74.50, pulled back small. A nice little zipper here that broke to the upside, and it looked like it would continue to 78. It didn't. We had a one-tick failed auction. This is what's called a one-tick failed auction. We took out the IB by one tick and then proceeded to sell off. This is the old probe and push the other way. There's no interest lifting above the IB. Okay, now we're going to sell it. And so it sold off into the RTH VWAP mid, pulled back, pushed right through, pulled back to the VWAP mid for full session, higher low, and then from there it was just a mess. There wasn't much to trade there. The afternoon was pretty dead. We were putting in lower highs here, as you can see, lower highs, slightly higher lows, and we broke to the upside on the close. And that's about all she wrote. So overall, yesterday's delta was negative. Price did not give up new all-time high territory. We put in a new all-time high at 46.74.75, and that was that. This, by the way, what we saw yesterday, this is very much expected. Coming into non-farm payrolls, coming into FOMC, this is what we get. We get kind of a market that's not willing to commit until it sees the number. And as you saw this morning, they're committing to the buy side. So here's the first distribution. This is the Asian session distribution right here. Okay. This is the second distribution. This is the Eurozone, the European markets pushed up and then rested right here. We got a point of control, a fair amount of volume right up here. And then we had our non-farm payrolls release right there. The SOC for non-farm payrolls is somewhere around 46.93. The non-farm payrolls release was very quiet. Let me show you that here in a second on my heat map. Let's go to the Edge Pro X here. Take a look. 8 seconds, 2 seconds. There it is. So this is what it looked like. So we get this wiggle right before the release, and then we pushed higher as soon as the number came out, and then we came right back and squeezed lower. Did I say 46.90? No, I meant 86 for the SOC. Came right back, traded through to the downside, and then finally buyers came in and took it up. And if you look at what's going on here, we go to this this offer that's been resting here a while, and we have a collision. It pushes through the collision to 97 by about a point. There was a lot of size lifting into that high, and then it just gets completely exhausted, pulls back, and then here we sit currently. We've been going sideways since then. We see that these offers keep coming in and selling ahead of the 4,700 and mainly sitting sideways. So overall, so you see there, lift, 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 into collision, sit back. Here's the collision zone, offered again, and we're pushing into that right now. That's the 270 lot at 95, resting there. So this is what it looks like. We have the 4,700 above us right up here. The order flow Here's that big push. So we just chopped around, we gapped a little bit on this move. This was not at the non-farm payrolls release. This was a couple minutes later, and it just goes straight up, and we get ourselves a 14 and a half point rotation here, which is impulsive. And then we immediately see it pull back and just go sideways into the current period. So we're opening in a gap this morning. We're opening in a gap this morning. The performance so far for the large caps, the S&P 500 is outstanding. So if you have a 401k with some mutual funds in it, you should be doing really well. You should be very happy. but the structures beneath us are not all that great. We have some relatively poor structures underneath that we are likely to repair very quickly. And what this market's been doing is it's been pushing up slowly and then taking back, a week or two of rallies in a day. And we just don't know when that shoe is going to drop. And then we form a nice base, and then we start to push higher again. It's not really a market that creates a rounded top, balance, pushes lower, has an impulse lower, pulls back, and then continues lower to repair. It happens in a very efficient, jerky way. It's almost like they're up here at 46.93. A model shows that we should be at 46.83, and it'll just go right to 83, consolidate, and come right back up, because another model shows that the current valuation should be at 46.50, for example. It's not really making a technical rounded top, coming down, and which gives us a nice opportunity to catch the turn early, not to catch the top, to catch the turn early. It's very often just a very difficult, quick turn. So we continue to get separation. We continue to get separation on the S&P from its monthly VWAP just 5 days in. We're continuing to do so in the Dow, the NQ. The Russell's been on a tear. The Russell is one of the strongest here, small caps, really performing very well. Gold, despite this inflation fears, is just stuck at the 1800. I mean, gold is just a very difficult trade, in my opinion. Silver, same thing, just holding steady, really unable to get untangled. The bonds are pushing a little bit higher, have been pushing a little bit higher, but they've been sitting sideways, really. The bonds reaction, the 10 years and the bonds reaction has been stronger than the 10-year. The 10-year is really stuck. I mean, this thing is really log jammed right now. And then you have energies, which came back. Remember yesterday, came back to the VWAP, held it for a little bit. It was like a 82.60, held it for a little bit, poked through the 83, and came right off. And currently, it's hanging out right down here. You can see we're getting some pretty good separation. We are below last month's VWAP as well. The energies are starting to create a downtrend. This is why I was saying we're likely to see them down at 75 as a commodity. Nat gas holding on pretty tight, still trading at 571 and a penny. It's holding steady. It's holding above its monthly VWAP, but it's not at the higher prices that we saw that are creating problems for the UK and throughout Europe. Back to our review here. We did push the high. We are pulling back. We're in the upper distribution, 3 distributions. And what that does, if this market doesn't go dead right after the open or right after the European close, this is giving us very distinct areas to define risk and to define support. This may create an opportunity for some pretty decent trading today, given that we have range and we have pretty decent volumes. So at least for the first 2 hours, make sure you turn off your distractions and you focus, because we do have some clear structures from the overnight session, basically lines in the sand. Okay, so I'm going to leave you with that. We do this every other Friday. While I'm going through expectations for today, I'd like you to take a moment to just type in where you're located as we're speaking. What is your city, state, and country that you're in? If you have a Twitter handle, please do not share your email. The system will block your email or phone number. Please do not share that. If you have a Twitter, put it up. It helps others find you and hopefully connect with you on a more personal basis. Maybe you can find an accountability partner or somebody to talk to about good or bad days by reaching out. So please do so. It's just, even though we're geographically unconstrained because we can meet with anyone and see anyone online, it's just nice to see that somebody's local to you. Let's take a look at what's expected for today here. Look at that. Just a lot of diversity. Thailand, India, Iowa, Taiwan, and so on, Florida, all over the place. There are people in Israel. There are people in Lebanon and Saudi Arabia. It's pretty awesome. Turkey. So, what are we expecting here? The market's taking a bit of a rest. We have okay volume. The volume at price here seems prominent, but relative to day volume, it's not that high. And we're talking about a point of control up here, or a high volume node up here that's got somewhere around 3,000 contracts or something, creating this prominent high volume node that's not very significant for after we open. So what we're looking at here is most likely an open auction out of range, a small pullback, and I'm looking for it to challenge the 4,700. The 4,700 right here. Why is my century figure not marked? The 4,700, and potentially push into this measured move at 03. So I'm going to mark the 03 and the 00 right here, looking for that to be the case, and then come back in, likely to consolidate for an extended period of time around the open before we start clearing down into the overnight point of control area and the most prominent high volume node in the area. We're right up against 1 Vol Sigma right now for the close. So this is what I'm expecting for today. I'm not expecting a runner today. I'm expecting, coming into the weekend, I'm expecting the market to make a higher high, higher low as it's doing. I'm expecting it to keep the gap open. But we saw signs yesterday, and this could be because non-farm payrolls is coming today. We saw signs yesterday that the market is having a hard time pushing that IB or pushing higher. So I'm expecting some of that exhaustion to go into today. The secondary is an open that pushes the 97 to 0, below into 87, consolidates, and then has a late session rally through the 9,700, and then pausing somewhere up high at new all-time highs. That's the secondary scenario. The tertiary scenario, or the third scenario, is more responsive. So in that situation, we have an open, push, pull back, consolidate, and then start to work itself back towards this 74, 70. Remember, if you remember, 76, 77 is what I outlined right here. 76 to 78 really would be the target in that situation, and the prior high to touch the prior settle at 73 and a quarter. So 73. This would be surprising if it did this. It wouldn't be surprising, but I don't expect it. But I would love to see this scenario. This grind higher, 1 or 2 trading opportunities a day, structured opportunities a day, not the best thing. So it would be nicer to see the market actually responding and moving that isn't so directional. Okay? Good luck, and I will catch you on Monday morning. Take care.